Hey everyone, welcome back to the channel. If you're serious about multifamily real estate, especially value-add deals, you need to know about a powerful yet often overlooked metric, untrended stabilized yield on cost. This isn't just a fancy term, it's your secret weapon for conservative underwriting, focusing only on what you can truly control. Let's break it down. So what exactly is untrended stabilized yield on cost? You might be familiar with stabilized yield on cost, which calculates your projected return on total project cost after renovations. Untrended stabilized yield on cost takes that concept and adds a crucial layer of conservatism. Untrended stabilized yield on cost is your future stabilized net operating income, NOI. That's the income after all operating expenses once the property is fully renovated and leased up, divided by your all-in project costs. The key difference and what makes it untrended is that this future stabilized NOI is calculated without any assumptions for market rent growth. You're essentially underwriting to a 0% rent growth scenario. Why is underwriting to 0% rent growth so important? And why does untrended stabilized yield on cost matter for your deals? Because it forces you to rely only on the NOI drivers that are controllable through your active management and capital improvements, not on a rising tide of the market. This makes your projections much more robust and realistic. If your deal works and hits your target, untrended stabilized yield on cost assuming no rent growth, you have a very strong investment thesis. Any market rent growth you do achieve becomes pure upside, a bonus on top of your defensible projections. It's a fantastic stress test for your business plan. Let's look at those controllable NOI drivers that untrended stabilized yield on cost emphasizes: renovation premiums defended by comps. This is the direct result of your capital expenditure, or CapEx. You're improving units and can confidently project higher rents, but critically, these higher rents must be justified by what similar renovated units in your submarket are actually achieving. This isn't speculation, it's proven by comparable properties. Other income, fees, rubs, etc. Many mom and pop properties overlook these. By implementing professional management, you can add revenue streams like pet rent, application fees, late fees, laundry income, or RUBS, ratio utility billing systems, for utilities. These are direct boosts to NOI, regardless of market rent trends, payroll, or other expense efficiencies. A professional operator can identify areas to reduce costs, optimizing staffing, negotiating better vendor contracts, implementing more efficient maintenance schedules, or leveraging technology. These operational improvements directly enhance your NOI. By calculating untrended stabilized yield on cost, you're building a highly conservative model relying only on factors within your direct control. This metric empowers you to make smarter, more defensible investment decisions in multifamily real estate. If you found this explanation helpful, give it a thumbs up, subscribe for more insights, and let me know your thoughts in the comments below. See you next time.